that both short and long-term resistance or long-term mass both rocket through that descending resistance line, exactly one almost at the precise same point, but two also exactly where we start to see the massive sell-off begin. So basically what we're saying is that, you know, this is, again, you're going to see these sloping, especially in long-term WAVEPM, you're going to see these sloping bulls, and they're just going to go up and down and up and down. And it's those down phases which are really consolidation, and it's those up phases which are trending, which is mass expansion. But you basically can't validate the mass expansion in terms of trending until it has violated the compression phase. Again, this is just it's the caterpillar. The caterpillar's got to fully compress before it can expand. Compress, expand. And it just is. If you look at the measure the very top of where you started to draw this descending resistance line, if you mark price, at the very start there, if you mark price right there, and so where
in fact, it's already marked. Basically, it's already marked.
Right, and then the other thing too is that if you mark that price all the way to where then you can see that WAVEPM ends the compression cycle, where is then where is price at that point? Do you think that's what I'm telling you is this is absolutely amazing, because in a period of mass compression, unless it is the final stage of a trend where you have mass come together while price is still edging in one direction or another, and I'll repeat that again, unless it's the final stage of a trend, meaning that both sides of the or that the opposite side, if we're moving down, the top side is given in and is finally compressing downward to allow the distribution to move. Unless we're in the final stage of a trend, mass compression means lateral trading. And the other side of it is too here is that if you look at your volatility bands, and this is why also we want to use WVAP, the Whistler volume adjusted volatility.
That's what this is.
Okay, yeah. If you actually drop that full, is that a 5,000 tick WVAP?
No, it's 10,000.
Oh yeah, I would pull that. I would actually make that like 20,000 tick and make it a really thick line that we can just see. That's 2,000. We want to make it 20,000.
Oh.
What you're going to see here is that WVAP is going to compress in a nice slow bowl shape exactly to the point where right about when we start trending, and that's when WVAP is going to start to expand again. And why is that? Again, you got to ask yourself. Well, the reason why that is, Meryl, why WVAP is such a good indicator in that case, and is that I don't think that's 20,000 tick.
Isn't that 20,000?
Oh, it is 20,000. Let's drop that down to. So let's drop that down to 5,000. Yeah, there you go. So what you're seeing is basically in the case here where we kind of like look at what's going on both with your long-term volatility bands, but also WVAP. If you actually, let's go back to the 20,000. It's just nice and calm and slow. Actually, you could even up that to like 30,000, just so it's just for everybody here for a matter of example. And by the way, just for the room, sometimes I'll up my WVAP up to like 20,000, 30,000, 40,000, only because I'm kind of trying to identify the trend of volatility, but not because I'm actually deriving signals. And it's really important to make that distinction because I don't want to lead you wrong. And it's important to know that I'm not trading based off of the signal that is derived here. But then, okay, so Meryl, if you were to pull that chart down horizontally, and then what I want you to do is connect and descending resistance, connect the highs of the WVAP volatility bands, draw your descending resistance and your ascending support, and I think you're going to see some pretty cool stuff.
Okay.
All right, so you want to pull the chart down so it compresses vertically.
Yep.
Yeah, cool, good work. Okay, so here's what I do.
Look at that. Yep.
Yeah, what is cool about this, because what happens is you kind of know that you have this massive, so we'll go through these periods of low volume, like short-term volatility of whatever, when basically markets are confusing, and you're wondering if the breakout is going to show up or not. Well, here's the thing, is one, you wouldn't have been able to identify this precise point exactly until after that you have the first massive hump of volatility, and then you have the second compression phase hump, and it's after that second compression phase hump that basically you can draw the ascending support and the descending resistance. Well, at that point, what you've got is you basically have a breakout marker, and you can see where the triangle comes to a pinnacle here. What we're talking about is literally a total compression of volatility, where you know that after these volatility triangles or flags or pennants or whatever completely come to a head like this, it's at that point of the very tip of the triangle, it's just barely shortly after that you're generally going to see the breakout truly ensue. So what it does is it alerts us, one, to be looking for the extended move, but two, if that triangle, if the move that it's testing it before, obviously, on the top side here is testing, say, the upside here, a breakout, and yet if you look at your short-term WAVEPM on this chart, at that time that it was testing it, it was still in a descending trend. You see what I'm saying?
Yes, right here. Yeah.
Yeah, the other thing too is that, do you see on your WAVEPM, see that nice flat little line right there? Excuse me, okay, so say you have your descending trend here, and then you have a second descending trend, or excuse me, the second hump just before the the breakout or breakdown. If you were to draw descending resistance on the yellow, draw that descending resistance line. And what you're going to notice is that this also will line up precisely at the point of what?
Breakout.
How is it possible that all of that shows up? And at the same time, another massive indicator here, Merrill, was another massive indicator on whether the breakout was real or not. If you had just drawn resistance on the average volume level during the period of which you were seeing here, where does the volume uptick?
Just before it. Yeah.
Bingo.
And
it never showed up on the head fake.
Oh, yeah. Very good. Oh, yeah.
So that's, I
that's
think,
really pretty.
Yeah, and the other thing too is that, and I got to tell you, if I miss the initial stage of a breakout or breakdown, I never sweat it. And the reason why is because there's always going to be a pullback immediately after.